Hi there, it's Victor here from foreshowmarkets.com. In today's video, I will be sharing with you how to identify head and shoulders patterns. Okay, so head and shoulders pattern is one of the most powerful technical analysis patterns in the financial market. Okay, it applies to forex currencies, it applies to gold, silver, crude oil, Bitcoin, cryptocurrency, whatever it is that has a chart in the financial market, stocks, it applies to all of this. But as usual, I usually use currencies as my case study. Okay, so let's look at what a head and shoulders look like. It is named after the structure of a human being. Okay, so as humans, ideally you have a head and you have two shoulders. Okay, so someone came up with this strategy, and you see it very often. You see it very often in the market. Okay, whereby so your head is basically, I've taught you support and resistance. Your head is basically a resistance, a higher resistance. Your shoulder, one shoulder to the left and one shoulder to the right. So the chart, your candlesticks or your charts will give you such pattern. A higher resistance at the top, which is the head, a lower resistance to the left, which is the shoulder, and then a lower resistance to the right, which is another shoulder. Okay, so every head and shoulder pattern comes with a head and two shoulders, simply meaning a higher resistance and two lower resistance on the left and on the right. Okay, a higher high, right? A high and two lower highs on the left and on the right. That forms your head and shoulders pattern. Okay, so just like I taught you in double tops and double bottoms, the key is the neckline. Okay, the key is the neckline. Okay, so you can see that the two heads, in fact the head and the shoulders form two supports. Okay, you have one here, you have another one here. Okay, so these supports are what basically this support here went up and formed the head. This support here went up to form the second shoulder. Okay, so you identify those two supports here. The first one is the support that price went up to form the head. The second one is the support that price went up to form the second shoulder. Okay, so you simply just join the two supports here, join this to this, a straight line, and extend it to the right. Okay, so how do you trade head and shoulders? Simply you sell once price goes below the neckline, you sell. Okay, once price goes below the neckline, you sell. Put your stop loss above the shoulder here. Put your stop loss above the shoulder here. Then you can calculate your stop loss and then make your take profit 2 times of your stop loss or 4 times of your stop loss. Okay, let's do a practical example on the whiteboard. Okay, so let's say you have euro dollar has been going up, yeah. So understand that head and shoulders are reversal patterns. Okay, so you usually wait for a trend to form and then use a head and shoulder pattern to help you spot when that trend wants to reverse. Okay, so you don't trade the head and shoulders in the middle of the market. You wait for a trend, uptrend. Okay, head and shoulders, you wait for an uptrend. Okay, a big uptrend, then you see something like this. It comes down. Okay, it's starting to form. So you never know if it is a head and shoulder pattern until it does this. Okay, higher low, higher high. Okay, at this point you still don't know if it's a head and shoulder, and then it comes down. So it's not always going to be on the same line. It can be higher or lower, preferably higher, and then at this point it's taking shape, and then probably you see something like this. Okay, and then at this point we start suspecting a head and shoulder, and then so you identify your neckline, your support, join that line and extend it to the side. Okay, so what you are waiting for is for price to come back down, break that support line, and once price goes below that support line, you sell. Okay, now price can continue going up here. If price goes up, like this, that is an invalid head and shoulders pattern, so you don't need to trade it. Okay, you look for the next available pattern on this currency pair or any other asset you are trading. Okay, so let's assume that this came down. So I clean this. Let's assume that that came down. So the moment price goes below the neckline, okay, so this is head, this is shoulder 1, left shoulder, right shoulder. Okay, so this is left, this is right shoulder. Okay, so the moment price goes here, you sell below that neckline. The neckline is the key, and then your stop loss. So let's say this high was 1.11250. You can put a stop loss somewhere around, just, it shouldn't be exactly on the resistance. Let's say 1.11. Let's say you can do 40 as your stop loss, and so let's say this is 1.1. Let's say your entry price is 1.1100. Okay, so it means your stop loss is equals to 40 pips. Okay, a head and shoulder, when it works, it usually gives a very big move. Okay, so you can do your take profit is equals to 2 times stop loss or 4 times stop loss, which is equals to 80 pips or 160 pips. Usually goes big, so we could use that. So you expect this to come down, do all the rubbish, all the funny movements. It won't just go down in a straight line. Okay, it won't just go down in a straight line. It's going to do the normal market movement, up down like that, until it hits your take profit or not. All right, so that's the basic concept of head and shoulder. Let me just quickly show you the inverse. So the opposite of head and shoulder, just the way you have double top and double bottom, you have the inverted head and shoulders. Okay, so for inverted head and shoulders, you need to wait for a downtrend. Okay, so you wait for a downtrend. Okay, remember I said head and shoulders are reversal patterns. So for you to look for a head and shoulders, you need to wait for a big trend. For an inverted head and shoulders, you need to wait for a big trend coming down. Okay, then you see a support, you see this, you see something like this. It can even be higher like this, then something like this, then like this. So once you spot this, remember you have your low, you have your higher low, you have your higher low here. Remember, this is equals to a higher resistance, a higher support, higher support. This is support. Okay, whatever you want to call it. Okay, so once you have this pattern, it always looks like this. You identify your resistance here, then join the line of the two resistances and extend it further. Okay, the moment price goes above here, you buy. Your stop loss is, let's say, 10-20 pips below the support, below this support. So stop loss could be around here. Okay, then your take profit, then if it goes in your favor, good one. Okay, market doesn't usually move like that. Market moves like this. You understand? So this one as well, market doesn't just go in a straight line. Market does this kind of movement. Okay, so that is basically how it works. So if this is your stop loss, let's say this was let's say your entry price was, you entered at 1.1100 entry. Your stop loss, let's say this price, you put your stop, let's say the support here was 1.0970. You can put your stop loss at 1.0950. Okay, so that means your stop loss from 1.0950 to entry of 1.1100 is equals to 50 pips. Okay, so you can make your take profit is equals to 2 times stop loss, which is equals to 100 pips, or you can make it equals to 4 times stop loss, which is equals to 200 pips. Okay, that is simply how it works. Okay, I will consolidate on this when I show you how to apply risk management to your trading. Okay, so that's your basic inverted, this is your inverted inverted head and shoulder. So it's simply an upside down head and shoulders. Okay, let's look at the slide example. So this is what it looks like, right? So normally you see the market coming down, and then you don't just look for this in the middle of consolidation. It will fail you. So you have to wait for the market to come down big, and then you start looking for a reversal pattern, which is your inverted head and shoulder. Okay, so this is what it will look like: shoulder 1, shoulder 2. This is the head, inverted head, and then you join the two supports, you join the two resistances, 1, 2 here, extend it further, and then once price breaks out above that neckline, you buy. Okay, put your stop loss below here, put your take profit, two times stop loss or 4 times stop loss, and you're good to go. Okay, if you learned something new in this video, give us a thumbs up. If this is your first time watching our video, click the subscribe button so that you get notified whenever we upload a new video. To get notified, simply click the bell to the right of the subscribe button and click all notifications. So whenever I upload a new video, you will be notified. All right, so you can consume that information as fast as possible. Okay, I want to say, and I will keep saying it, a lot of information, a lot of information you see on YouTube, they're just meant to lure you into the market to lose money. So you need to be extremely very careful. Okay, and on this channel I try to be as transparent as possible, letting you know what's obtainable and letting you know how you can make money from the market, the truth and nothing but the truth. Okay, all right, now I'm not really selling you anything, I'm just teaching you, and I expect you to grow to become a profitable trader. All right, so I'll see you in the next video. Have a wonderful learning day, have a wonderful and a profitable day out there. Cheers.